Hey guys, what is up? How are you doing, Red Sox? Thanks for being here. You as well, Mark. Thank you so much for being here. It is martini time. I just opened my sober guy drink. With me, I mean, yeah, I like beer because it's fun getting drunk and stuff. But I also kind of like the feel of the burn in your throat, and seltzer water, does that. I also like something to drink on when I'm at a party and I'm nervous, and seltzer water is a good, I just love seltzer water. It's like beer with no alcohol. But anyway, and it would be totally healthy for me if I didn't add sugar and caffeine to it, probably. It's still probably healthier than beer, though. So anyway, all right, guys. But yes, happy Friday. I've been monitoring for live streams that Coach might put on, or, somebody. And I haven't seen one, but I saw some really good recorded content the Coach had. And I was probably just going to show that again in the absence of, while we're waiting for other stuff to come on. But Jay talks about a new fund that has single downside and triple upside to a point. I didn't really listen to it. I was so excited about it. I was texting in Discord, but it's about a 10, 15-minute video. And anyway, I think we're going to start with that. And I'm going to monitor for other stuff. But then I have some other stuff to talk about. We can talk about whatever you want. I had a question in Discord. How would you get triple upside with single downside? But we'll go to option strat and see if we can figure something out. I bet we can. We'll look at it. All right, guys. So I think I have the, let's see here. I'll go to my history. I've been watching a lot of guitar stuff, trying to keep my mind off New York. After I got off the morning live stream, I went and watched like 3 hours of guitar stuff. Me and Mark, Lonesome Trader, have been talking a bunch about guitar players in it anyway. And I was watching some of my favorite stuff. But anyway, and I was also watching Trump's in Texas. He's having a round table with the first responders. One of the first responders, actually a buddy of mine, or somebody that I've met 3 or 4 times, but a nice guy, a real estate agent. When I buy a house down here, I'm going to use him. But anyway, he's been down there the whole time cleaning up, and he's there right now. Okay, well, let me see. Where's Coach's video? I've been watching so much. I also watch a lot of politics, as you guys can see. And a lot of those I was just skipping through. I didn't.
An important day is coming for every American with money in the markets.
Some of that stuff.
And it'll be here sooner than you think.
Okay, so let me get the volume up as loud as it'll go.
Crash. And I want to show you the exact month I believe it's most likely to occur.
Hey, Mr. Shelley.
Hi, everybody.
Welcome back, Jay. So this is in person now.
I know we're live.
Yeah,
in
we're
person.
Live.
Amazing.
So, absolutely. So we were just talking to Mike, and we realized that like the concept of NAV erosion, like there's really no such thing, as he was explaining.
Thank freaking God, Coach. He finally admitted it. There's no such thing as NAV erosion. And gosh darn it.
So we're going to ask it a different way.
Not with YieldMax, at least, right? Not with these things. Yeah,
right.
It's different.
So the terminology, like Mike said, should be like beta compounding or something. Is how he described it.
Mike is so smart. Like,
yeah,
I love like Venuto is great. He has a lot of knowledge. Like I think it's one of those things. Like when you think about, and maybe I'm going to give you a different explanation than Mike did. But when I think about, you good? You got to say.
I was trying to, just turn it.
You want to get both those? You want to say next to you?
Steven Spielberg. Coach is no Steven Spielberg. Coach is, not great videographer.
I think I got it right here, like this. Let's see. There we go.
I'm gonna try
Stock
to
goes up, things are going to go up, right?
Mm-hmm.
Of one of the YieldMax builds, it's the movement of the stock and the impact of the option strategy.
Yep.
Right.
Mm-hmm.
Stock goes up, things are going to go up, right?
Right.
And then if the option strategy makes money, the NAV will go up a little more, and then we distribute that down. If the option strategy loses money, there's an offset. If the market goes down and the option strategy makes money, we're still going to distribute that out. So if you think about the two components that go into the NAV, it's the option piece and the long stock exposure. That's it. You just know you're always going to get the option exposure distributed out, right?
Yep.
So that impact has this, a declining impact on the NAV itself. I'll call it a decline. It's fine to call it a NAV decline.
Right, because it does drop. The funds do drop.
It's depletion.
NAV will drop, yes. Unless the underlying goes up. You look at Palantir, you look at Hood, you look at Carvana, you look at MicroStrategy, right? You can have appreciation. But if you look at, and I'm going to use some round numbers, right? If you look at Misty that went live at 20, it's trading at 22 today, I think. It is distributed $39. Like, do you really feel like you had to K? No.
Right, and it's at its same level that it was like before, like when it launched.
So it doesn't always have to go down. It doesn't
Mhm.
always have to go down, right? It's not built in like a triple leverage fund or a futures-based fund that has to deal with contango, and let's not explain what that is. But so the concept of NAV decay really isn't appropriate. Actually, it's funny. Like, there's so much chatter about it. I feel like we need to get ahead of it and just re-educate people.
Definitely.
It's just the nature of a cover call strategy.
Right.
Which is why, by the way, if you reinvest some or all of the dividends, I know it's not the most popular thing for me to say, your portfolio allocation will be bigger and you have more shares. So
if you reinvest.
Do a DRIP, right? Dividend reinvestment program.
Right.
At your broker. It's one of those things. You know, if you went from 1,000 shares to 2,000 shares and the price of the ETF went from 20 to 10, you're still at the same value, right? So, you know, I think there's this nice mix that everybody will figure out what their reinvestment rate is.
Mhm.
Look, if it's zero, it's zero. Just realize you're divesting to cash.
Yeah.
If it's all of it, you realize you're double downing every single week or every single month, whatever the time frame is.
Mhm.
So if you're like, hey, I'm here for the yield, guys, stop telling me to give you all my money back. Fine, that's one approach. But have some going back in. They're built to be reinvested, right? I mean, that's the whole thing.
Well, like you've said, there's a YieldMax fund for everyone. So people that want a more stable dividend with lower dividend, more stable, you know, if we will NAV, then there's that.
Look at AMZ, right?
Yeah.
Look at Amazon. Look at Netflix, right? I mean, there's a long history there of from time to time, they've had one-day moves that have been interesting over the last year and a half, 2 years, 3 years. But look at those as an example of like, okay, stability in the NAV with consistent distributions from income. That could be somebody's flavor.
True.
Yeah.
Now, Mike introduced a very interesting topic. So you guys have something called Lev Pro on the way.
YieldMax.
YieldMax. I keep getting it wrong.
Yeah.
Yeah. You know why? Because I'm used to Pro shares with the 3X.
Oh.
And yeah, this sounds like a game changer though, because
It might be.
3X with limited downside. That sounds. You want to talk to that? That sounds.
Yeah.
very
So
interesting.
let me explain it.
Yeah.
It is 1-for-1 downside. It's actually no limited downside,
Okay.
but then it is 3x up with a cap.
Yeah. So 1X down, not 3X down.
1x
Yeah.
down only.
That sounds amazing.
That's great. So it's
Yeah.
long stock risk. That's
Right.
1x down.
Yeah.
And then the upside is 3x, but to a level. So
Mm-hmm.
let's just use a very broad example. We are long NVIDIA, and then we buy 2 calls at the money and sell 3 calls out of the money, right? Okay, that's a little nerdy for me to say that. So basically what that'll give you is up into that short strike, you should make 3 times the appreciation of NVIDIA. So let's say that strike is 3% out of the money for next month. If NVIDIA is up 3%, that fund should be up 9. If NVIDIA is up 2%, that fund should be up 6. If NVIDIA is up 10%, still only be up 9 because you have a cap.
Oh, I see. So it's
Yes.
capped at that. I
It's
see. Yeah.
capped. It's
Yeah.
not 3x unlimited up. It's 3x to a level.
Mhm.
And the argument is that's a level the market is kind of defined as, well, maybe that's what you're getting at. Who knows?
But that's like the price you pay for the limited downside too.
It's the price you pay for the leverage is giving up some of the upside.
Yeah.
The limited downside is just because we're going to use the long stock as collateral, like the long exposure. So
Right.
we may use synthetics again, like YieldMax. We may use swaps, which we've never had a conversation about that.
We should, because that was one of the ways. So a lot of people thought, not to change the subject, but a
Yeah.
lot of people thought that what was in your prospectus for a handful of funds
Misty and NVIDIA.
about NAV erosion, dare I say, like mitigating NAV erosion, which is not being implemented yet. But that included swaps and owning more of the underlying, right?
Yep.
And selling further out of the money.
I don't know if we put that in there, but
Yeah.
you're right. We made some changes. Those changes will have zero impact on the performance of the fund, zero impact on the NAV.
Yeah.
Actually, I would say in some cases, there's one example in there, which was using a deep in the money call to get your long exposure. That might have a little 50, 100 basis point improvement on performance, but you fail the ETF test, right? So there's this concentration test when it comes to ETFs. You can't have more than 25% market exposure in any name. This is why YieldMax works. The combo keeps you under full, because people say, why don't you just own the stock?
Yeah.
Can't own 100% of MicroStrategy in MSTY, you won't pass the diversification test.
Right.
So we use options to do it. But those are all tactics that were added in case we had capacity constraints from OCC contract level. Those are all those. Look, I know it's like, wait, can't wait for them to do the new strategies. They're the same, no change. It won't impact any of the returns.
Like you said, it won't have any impact on NAV at all.
Nothing on NAV, nothing on returns, nothing on distribution rates, no change at all. Just different vehicles, different ways for us to execute the strategy.
Right.
If we needed it. If we needed it.
Now, can you explain to people that may not know, like just in basic terms, like a synthetic and a swap to the audience members that might not know?
Okay, a swap. Here's the way a swap works.
Yeah.
It's just a contract with you and a bank, and every swap represents one share, right? So it's just like owning stock, except in a bank note. You'd be like, well, why would you do such a thing? Well, I can hold bank notes and treasuries and bonds. They don't count towards that concentration requirement. So you look at leverage funds, right? It's like,
are you interested in mushrooms? Do you like drama? You love this. I'm Matt, a food scientist.
everybody here, most people have probably bought on margin, right? Hey, I have $100, but you bought $200 worth of stock. That's how you get the 2 times leverage in a swap product, right? This is not YieldMax, by the way, no leverage in YieldMax. But other swaps, this is the use case of why you use a swap. It's just an agreement with the bank.
Yeah.
And there's an expiration. And at some point they could call the note, and there's a margin requirement for it, but there's no margin balance. So you can use collateral to pay for it.
Yeah.
That's a swap. A combo, you've heard me talk about the combos all the time. Long call, short put, with the treasury, 100% replicate long stock. So you get tick for tick move on that build, the 3 pieces. You need the treasury piece for collateral and the yield.
Yeah.
Makes it feel like you're long stock. That's it. These are just all different ways
It's
of getting stock.
mimicking the stock.
It's
That's
all
why they
mimicking
use
stock.
that term, synthetic.
That's right.
Yeah.
Synthetic.
Right.
Like it's replication. What I
Right.
tell you, when you look at a fund like Ulti or LFGY or Chippy, when you look at those funds, those we don't have the concentration requirements or issues because there's so many different holdings in those. Instead, with those, we have long stock.
Yeah.
It's just that it is easier to own long stock. Let's face it.
Absolutely.
I never have to sell it. There's no expiration. There's no tax realization.
But you know, most of this audience, like, they invest in ththese funds because they want the quick gain. Like, owning stocks, like, boring now, especially to the newer generations. You know, people want the quick, like, the high. They want to get rich quick,
right?
You know?
Like you just got to pick the right stock.
That's
right,
why I
picking
do
the right
options.
stock.
I do options videos. They don't get nearly the views that like a dividend video does.
I love that world right now.
Yeah.
This wasn't always the case.
Right.
Yeah.
Yeah.
Look, I think there's all of these different tactics that we utilize here. It just helps go like, look, the level of, it's funny. I was doing an education curriculum for somebody.
Oh yeah.
And it was just explaining all the different tactics we use in YieldMax. And I was like, wow, we use like 14 different option tactics to execute these strategies, right? And it just, you know, there's so much flexibility in a lot of the builds. There's so many different ways to do the same thing. You know, we're always looking for the most efficient.
Speaking of education and curriculum, I'm going to plug your book too. I recommend that anyone should read your book.
I'm going to fast forward past this part.
They are still wide markets, right? And it's going to be hard to get a good feel, but now there's so much more liquidity in the. Why managing risk is
Yeah.
What they are.
Okay. We can rest assured though that YieldMax will come up with very creative ticker names like you have for NVIDIA with the inverse fund.
Yep.
And so on.
And chips.
Dips and chips.
Yeah.
Yep.
Look, by the way, YieldMax is not YieldMax. They are different. It is more of a structured product for a 1 month period. You got that 3 up, 1 down, and then we do it again every single month. I don't know what the yield is going to be on these. It's not the focus of yield. The focus on YieldMax is capture that short-term leverage.
Mike mentioned innovator ETFs also. These are going to be similar in structure to some of those.
Yeah, but they are longer in term, and I think we're doing it. Look, obviously, we're going to do something a little more innovative than exists today.
Yeah.
We're not going to replicate anything.
Yeah.
There's lots of buffered and accelerator products that are out there. We think that this, again, is going to be a unique offering. But again, not YieldMax, YieldMax. Different.
And then Ulti, our favorite fund. You know, the question we always go back to, why Ulti no go up, right?
Hey,
So
Ulti go up, bro.
Say that again.
Ulti go up, yes.
So I look at Ulti. There's people that absolutely, they say it's one of the best funds out there, and you're paying a consistent dividend.
It's been fairly consistent in that 80, 85 range annualized basis. Yep. Weekly now, which made it harder. Like going to weekly was harder because not to come up with 1.5%, 2% cash every week.
Yeah.
So we're constantly kind of selling and closing positions. We get close.
Oh, there we go.
Yeah. So look, Ulti go up. Ulti go up. Look, I think this is. You've seen the path of Ulti.
Mm-hmm.
You saw the changes we made. You saw the protection aspect that was added. But we didn't change the names. We didn't change the level of volatility we were going for.
Right.
We just changed the option structure. So I think there's been a lot of positive momentum on Ulti lately because of performance.
Mm-hmm.
Hats off to the guys that are doing those, right? The team is doing a wonderful job on Ulti. I think we'll continue to see more growth there. But let's face it, ultimately, it's about total return.
Right.
And we've got some pretty positive total returns right now when it comes to Ulti.
Right. Awesome. Well, thanks for your time, Jay. We got to squeeze this in there.
So it's always good seeing you, Coach. I'm glad we can do the.
Okay. You guys may have seen some of that before, but I wanted to get, so I found some stuff on the internet, but the YieldMax, it is a title product, but it's not a YieldMax product. Anyway, if anyone knows where the prospectus is for this doesn't have the prospectus on it, but give me the prospectus and we'll take a look at it. Let me try this. SEC.gov. Yes, here we go. All right. Well, I don't have to look at this, right? Okay. Well, but let's look at this. Okay. So they're coming out with a whole line of products. Of course, all I'm picturing is do it on the SPY, do it on the Qs, and they aren't even going to do it on there. They're doing it on Bitcoins. I mean, that's good. It's fine. It's probably a better product for single stocks anyway. Can you imagine having triple leverage micro strategies with single downside? I mean, now the catch is you don't get all the upside, and that's what people don't realize is a lot of the return comes from days when sometimes virtually all of the return for a year might come from a few days in a strategy. When I'm testing out the GOAT strategy, so you guys know, I have I'm selling options, but I'm also long at the same time. Well, there was a day that it was up 10%, and what is that, April 10th or something? So that my strategy made like $263,000 that day on the back test. The back test doesn't pay. I get that. But so I was looking at my strategy and I was thinking, well, will this even be profitable without this day on it? So I went back and I ran a back test that stopped the day before that happened. Yeah. And the GOAT strategy still compounds money faster than the SPY. But that's something you have to consider. Say if you ever, if you're ever trying to develop a strategy, because sometimes those home runs can be responsible for most of the game. So anyway, that's what you're giving up on that. You, once again, just like with anything, even with the triple leverage, I'm imagining that over the long term, you'd be better off with just buying micro strategies. Micro strategies, you also get 1x down. So it's no different on the downside, but you get all the upside. Now, it is cool to get this is called an accelerator, and there's other Innovator has it. You heard Jay talk about it. There are funds that do this where between a certain point you can get double upside. Here, let's just look at Innovator. Innovator ETFs. I'm just because I was going to try to show it myself, but they have their own content already. Now I need to keep an eye on YouTube also. Gosh darn it, it was a bad day for my iPad to be dead. It's plugged in though. All right, gosh darn it. But anyway, okay, so let's look here. Buffer, Bitcoin, 100%, defined, quarterly, accelerated. Now Jay said we aren't going to do something the same. Well, the catch is Jay's using monthlies. These guys use, I think, daily or a shorter time frame. But we'll look into that. Okay, so now these guys are doing it on the SPY, just like you ought to do it. Forget about those single stocks, but I'm just joking. All right, so let's just look at this one. It has 355 days left to go. Oh, that's right. Okay, that's what Jay's doing different. These have an outcome period of a year, and Jay's is going to do it every month. So, but let's see if they have some little. I think they have like some. A white paper or something. I've never heard of it, dual directional, but that sounds like something I'd really like. Anyway, I'll look at that stuff later. Well, I don't know. Let's just click on it and see what it says. but he's doing something like this. So let's just see what it says. It says, okay, the outcome period begins July 1st, 2025. And you know the cap before you buy it. On these, they will tell you exactly how much you're capped at. So the U.S. accelerated equity seeks to provide triple 3x upside return of the SPY to a cap with approximately single exposure to the downside over an outcome period. Yeah, it's the same thing. Jay's doing it on a shorter time frame. Let's maybe look at one that's been going, one of these accelerator products that's been going for a while and see. This one just started, but let's look at one that's been around since like April. It ought to be doing pretty well, you would think. I mean, so yeah, the April one probably would, it's called QTAP. Let's see about this one. Now it's going to take a huge hit at the 1st of April, but I mean, the same as the market, evidently, approximately 1x downside. And sure enough, look at that, 10%, 10, 11%. I think the SPY was down I thought it was down 15, but anyway, that's he did say approximately one time's downside. That's wonderful. So then you got that. Now, have you realized the 3 times upside? See, the blue line is the market. Market's always outperforming. That's why I always tell young guys not to, market just by itself. If you just want performance, just buy the market, right? And sure enough, even on this one, it works. Now, here's the other thing. This freaking thing caps you out at 7.5% for a year. So I'm really having a hard time making a use case for these. And now it's above the 7.5% now, but at the end if you hold this till the end of the outcome period, it'll be right at 7.5% if the market's higher than that. If the market's lower, it'll just be wherever the market is. So looks to be like on this one, you're giving up the good part about the market and taking the bad part, but there's probably something I don't understand. I'm going to check in with you guys and stop filibustering. How are you guys doing today? Hey, Carl, thanks for being here, bud. Alti is too risky. We'll talk about that in a second. Depends on your definition of risky, but yes, Alti is probably the riskiest one of these you can invest in. So I'm assuming did you hear Jay say, and it may have been before he said it, Marcus, that they might pay a distribution, but that's not the goal of it. But yeah, it's going to be more like a growth fund. He did hedge because he did say something about a yield. When you're shorting leverage on both sides, you're going to catch a yield from the decay. They're trying to, or that is erosion. They're going to catch a yield both way from the erosion, I think. So maybe that will be where they monetize some of that. They'll pay that out. But yeah, I'm imagining from what he said, yeah, it might pay a yield, but it's not going to be the focus. So I'm thinking 5 or 6%, something like that. If it just kind of happens to pay out something, I mean, but it's definitely not going to be a yield fund. Okay. Lunar, thank you for being here. Martini time. Okay. So did you guys like that video? I thought that was a pretty good video. Never mind. They pay monthly. Found it in Max's. Okay. Okay, good. Well, I think I just found it too at the same time somehow. I should have posted it to Discord. Let's go look at it real quick. Let's just real quick read the option. Let me skim the option strategy and see if we can figure this out any better. Okay, each performance period is 1 month, starting on the first trading day of the month. Okay. So this might be a good way to make a short-term play. Like you might want to buy TQQQ, but the reason you don't want to buy that is you get triple downside also. If your timing's wrong, if you're impulsive like me or early like me, or you're FOMO into a position like me, then you get that. Then you have to own that triple downside. This one, you don't have to own the triple downside. So it says if the underlying share price decreases, well, that's going to say it's one-time downside. Anyway, the fund's performance is subject to an upside cap that represents the maximum percentage return the fund will provide. So if that other cap was 7.5% for a year, this one's going to be about 3%. I think when Jay was giving his example, I think 3%'s in his head, but he wasn't talking about the SPY either. But I think on an index, I think that might be fair. But anyway, okay, I'm just trying to scan this without warning you guys. Period start dates. Fund will likely. Okay, here's the disclaimer. An investor that holds the fund shares through multiple performance periods may, and you can call that will, fail to experience returns comparable to that of the underlying security. Well, yeah, 100%. It should have said will. It should have said will there, in my opinion. But I don't know if you could, if it's, maybe it is May. I won't argue with Jay. So anyway, why don't they have one of these on an index? What the heck? I just want to see where it says option strategy or upside cap. The upside cap results from the fund strategy of buying it at the money call option to gain leverage and exposure to upside while simultaneously selling. That's a poor man's covered call, or it's a diagonal, or not even diagonal. It's a debit spread. I'm selling higher strikes or out of the money call options to offset the cost. Selling the higher strikes call options limits the maximum return, thereby creating an upside cap, blah, blah, blah. And he's saying they're using approximately 5% above the starting point. Anyway, okay, we'll do a full review on that some other time. Thanks for letting me look at that real quick. I appreciate you guys. All right, am I not sharing the screen, or am I just something screwed up? Yeah, I wasn't sharing that screen, was I? I'm sorry. It wasn't anything to see anyway, but I finally figured out how to tell. It puts a little blue mark up here like, hey, dumbass, look at this. This tab is, oh, no, this tab's content is being shared. Okay, well, I thought they put the blue thing up when it wasn't being shared. Huh. Okay, well, anyway, I guess I got to learn how to use the technology. All right, so let's peruse over to YieldMax real quick and make sure that there's no one on live, or not YieldMax. Let's peruse over to, let's peruse the live section of YouTube and see if there's any live content. Of course, President Trump's over there. That's really good. I'm glad to see he made it. Has a lot of fans in this part of the country, tons of fans. People say Austin's liberal. It's not been my experience. Yes, the city government and the newspaper and the things that make the news may be liberal, but the people around here are about half and half. Anyway, all right. Well, all right. I don't see any New York influencer stuff. So, but that's fine. I've got something else planned to show you guys. Let's go up here to, I may have put it in watch later. I was planning on I didn't know if was able to talk for an hour. I probably could, but this is so crazy. Epstein's bank account's still active. It's his I mean, like he's still alive or something. Maybe he is, but it's his brother. His brother got his murder. It's his trust. It takes years. We still had my mom's bank account for years after she was dead, paying taxes, and you know, they won't even let you close the bank account until, and on something as complex as Epstein. I mean, that's just a typical internet making news about nothing. They just don't understand how you know, I'm sure it's the executors of the state, because they're making a big deal about there's still money going in and out. Well, yeah, the estate owns property. They have to pay. They have to pay for stuff. But it's a cooler story to think that he might be alive somewhere. So, I mean, and maybe he is. I'm not saying that he isn't, but I'm just saying. All right. So before I started watching guitar stuff, I saved something I wanted to show you guys. This guy, I love this guy. And you guys know about him. I know SB watches him, and I'm sure other people do. But I just wanted to give this guy.
Texas locals get a brand
This
new
is a
meeting
good guy.
system
If you guys
for those
keep option
$39
ideas,
a month.
I don't always
No
have the
money
best
down.
ideas,
It's
or
gonna
you don't
cool.
like my ideas.
You can do some
to the
follow this
15th.
guy
So
too.
there's
I
only
mean,
a couple more
his name's
trading
Yagi
days
or Yagi
in this whole
or
position.
something. I just want to talk a little
So
bit
I
about his
created this
strategy
indicator,
he's
which
come up with. This is an interesting strategy for an ETF. This strategy, he's calling it the juice lever. I also like how he makes up names for strategies and stuff. It's basically it's a covered call, selling a covered call at the same time as you're selling a covered put, playing both sides of the market, collecting decay off both sides. It's you're going to be capped on both sides, but it's a really interesting strategy. But anyway, I'm going to put
gives
this
me
guy
buy and sell
video in the
signals
comments,
for
and you
any
guys can
chart.
go watch
Take a look
it
at this.
if you want.
When the bars change
But I
colors,
like this guy,
it
but I'm also going to show
Maybe it's going to go up, maybe it's going to go down. But to me, it's not quite at the edge, but it's certainly near the upper limit of the Bollinger.
He's just trying
Kind
to
of understand what we do for trade adjustments, because the trading days, there's only 2 hours left. Profitable trade. you'll see the range. I want them to kind of offset. And I'm buying a deep in the money, buying a deep in the money call.
But I forgot to mention, he's doing the covered call and the covered put synthetically, which is even better. So no stocks involved. Anyway, I'll let him describe it.
And to make this whole thing work. So check that out. It's really kind of fun. So what I'm doing is I'm buying a deep in the money call right here at the 535s. And I'm buying a deep in the money put. Those are my base positions, okay? I'm going out to September 19th. So I'm going out a couple of months so I don't have to even think about these base positions, okay? I want them to kind of offset on their deltas. I want them to be delta neutral. Now, over here is where the real money is made, and that's on the short position. Now, I'm not obviously trying to see if this position is going to go up or down. In fact, I don't want it to go up or down. I want it to kind of stay within this range. And you'll see the range in these blue bars right here, right? 540.
I'm going to go see if that's my ID, but I'm going to leave this on for you guys to
617 to 560. If the stock stays in this range, this is a profitable trade. Okay. But the cool thing is it's only going out like 3 trading days. Today is the 10th. There's only 2 hours left in today's trading day. Tomorrow's the 11th. Then we have the weekend. So this is going out to the 15th. So there's only a couple more trading days in this whole position. So what I'm doing is I'm selling the 550 puts, okay? And I'm also selling the 550 calls, right? So I have a bunch of rules in my program for covered calls, and I'm applying those same rules to the covered put side, okay? So you've got to kind of understand what we do for trade adjustments.
Anyway, this guy's good. Go watch him. I'm going to put it in the comments. I mean, if you're, like I say, my ideas aren't always the best. Once you've gone through the 3-leg risk reversal, if you don't like that trade and you don't like, there's a couple of other ideas I consistently do, broken wing butterflies and stuff. But yeah, my strategy is not for everybody. Scramble. I mean, he short strangles and straddles. There's a million ways to try to capture premium. So anyway, I meant to put that in the Discord. I'm sorry. Hey, Div Dad, how are you doing? I haven't seen you here before, but I appreciate you being here. Yeah, happy Friday, Div Dad. I don't know. I'm just finding out about them too. Are they YieldMax? Because he said they aren't going to be YieldMax. They're going to be I think they're opening a whole new brand. But anyway, but yeah, I'm going to do a full review on it. My thoughts are it's going to underperform just like they always do. Any type of option strategy almost necessarily is going to underperform just owning the stock. But it doesn't mean that option strategies may not be favorable. Maybe you want to own micro strategies but have a little bit less volatility. Well, you can kind of do that through Misty because Misty doesn't go down as fast as Mr. Of course, there's a payoff for that also. But so it's not like they don't have a place, but I'm saying if you're a growth investor, just get Mr. And I think that these might attract growth investors because they have triple upside, but it's only, it's I don't know that I'm going to have to look at it. I don't know. The upside is what you're going for when you're a growth investor, and that's where you get most of your gains. So I don't know, but I'll definitely have some more content on it. But I like that guy, Yagi, whatever. He's great. Now let me show. I wanted to kind of talk trash on an influencer, or I had one other one that I like too. But let's look at this. I'm just trying to kill time also until the thing comes back on. We're going to watch the bell ringing ceremony here in probably 10 minutes. So I just wanted to make sure we had something to talk about. It's either this or I can start doing back test and show you guys back test. I don't think you guys, because I was going to show you how to construct that 3 times up and 1 time down, and we're going to try to put in a back tester, but I'll do that some other time. That's not for this time. I'm just making sure that Coach isn't on here anywhere. I don't see any YieldMax stuff. Okay, so let me go back to history here. Like I say, some of these videos just came up automatically. I was not watching John Oliver. I promise you that. It comes up automatically, but why does it come up so often? They pay so much money. What I'll do is I'll put a video on, and then I'll leave the room, and I'll come back, and it'll be some liberal talking to me. It's the mainstream media trying to freaking get me to vote liberal. I mean, these guys. I'm really just joking. I'm kind of a closet liberal, or I'm really open-minded. I'm too open-minded for the MAGA crew, but I do lean on the conservative side of things. things. But anyway, okay. So I started. I started. It was a. Yes, this guy is the one guy I want to talk. So guess what? He's found 5 high yield ETFs that don't decay, 15 to 33% yield. I mean, these guys don't even understand what decay is. I mean, I agree these are good. These are good funds, but there's this. And I like Neos, but I just can't believe these people just, I mean, if you're talking about, hey, this fund has stable NAV, this high yield ETF has stable NAV, you don't really understand how covered call works. No covered call strategy is going to have stable NAV, but it'll have better NAV on the downside and way worse on the upside. But anyway, these guys that talk about this stuff just trigger me. But anyway, it's whatever.
For your wallet. For every $10,000 you invest in QQQI, you're looking at approximately $1,535 in annual dividend income paid monthly. That's real money hitting your account every single.
And I get what these people are talking about when they're talking about there's no erosion. They just mean the stocks, they don't go down all the time. I get that. The reason, but they're missing the reason these don't go down all the time. The reason the NAV depletes is because of the dividend. So he's showing us ones that pay 12% and saying I have steady NAV. No shit, Sherlock. All right. When I had another girl that I wanted to show, and I forget, she's somebody I've never heard of. She doesn't have a lot of subs, but she came on and did a whole little thing explaining how an in the money put is the exact same thing as a covered call. And anyway, I was going to give this guy as an example of somebody that doesn't get it or partially gets it or whatever. But then I was going to give her as an example of somebody that really gets it. But yeah, I just love when influencers understand the mechanics of these things. That's the main reason I got in this, is to try to explain the mechanics. So people, because they aren't perfect, they do a lot of bad stuff, mainly the capped upside. I mean, they definitely aren't perfect. They aren't for everybody. Real quick, I wanted to comment on the Alti being risky comment just really quick. And then it's going to be getting close to time to go over there. Gosh darn it. Why is it just sharing individual tabs? Anyway, let's look at this. I was going to show that lady, but I'll put her name in Discord. I just like people and she understood exactly. She explained it perfectly. They're synthetic equivalents in the money, and in the money naked put. You don't even have to own stock is the amazing thing about it. And that's so amazing because lots of times it's more capital efficient to do it that way. So, but let's look at ULTY. I forget the point I want to make, but yes, ULTY is definitely risky, but it's maybe in a different way than, let's look at ULTY versus YieldMax. Okay. Well, ULTY got off to a bad start. Let's look at it since the change. The change was whenever they started selling callers instead of covered callers or whatever. But anyway, I was just trying to show that YieldMax is going to be less risky, but it's not really turning out that good. Because it has more stocks, but it also pays like half the dividend. YieldMax pays 50%. So of course it's going to go down of course it's going to have a chart that looks better, just eyeballing it. But actually on this one, since the change, they've been pretty close to the same. But yeah, YieldMax is definitely risky. I mean, sorry. Well, yeah, YieldMax risky, but Alti's risky too. But don't think of the risk on the Dow. A lot of people think the risk is in the NAV depletion or the decay or the erosion because they go down all the time. That's a feature of it. But what makes these things more risky is they're capped on the upside. So over time, you're going to give up long-term growth. Not all the time. I mean, not all the time, but by and large. So that as long as you're aware of that, that's fine. Okay. So hang on. I'm going to go back here and share the whole damn screen. I don't know what the heck's going on. Yeah. But anyway, sorry to rant. But anyway, but I was so glad. I was so glad when I finally heard Coach say there's no such thing as NAV erosion. I've been trying to tell him that for 2 years or anybody. And he's always going back to, yeah, but anyway, but I really like Coach. He's a good guy. I'm not talking bad about it, but I'm saying I think that finally finally he's understanding how it works. I mean, these option trading, covered calls. If you're a young kid and and you've never done covered calls before, you don't know what you don't know. It's kind of a complex topic. So anyway, all right. Let me. I'm going to X this one out, and then I'm going to share. Okay, I'm turning the audio on, and I'm going to just hit the entire screen so I don't have another snafu. All right, now the NASDAQ itself is supposed to show this darn bell ceremony. So let's go to YouTube's NASDAQ channel. And then also if Coach has something up, maybe I can bring it up in another window or but I saw them advertising today, NASDAQ bell ringing ceremony. 3 years ago, all right. I'm just going to go to Fubu and pull it up on CNBC. I'll keep trying to find it, but I just want to make sure to watch these guys. But then we can also, if you want to, as soon as it's over, we'll look real quick. It's the end of the week. We'll look how the market closed, and we'll look at the max factor list. I'm getting ready to do a top 20 show probably tonight or tomorrow, but you guys get a real quick preview on what's on the top 20. I was impressed that Will was on there today. That was something else. Now, come on. It should be automatically signed into this thing. What the heck? I'm on my right profile, right? Yeah, Mike. Damn it. I mean, usually it just goes Fubu, welcome, Fubu home. Maybe this is it. It usually opens right to the. All right, closing bell live. Here we are, 9 minutes early. So we surely didn't miss anything. I'm gonna turn the volume down, but I'm gonna turn closed caption on. Look at that Bitcoin. That's wonderful. Let me get this. All right, guys. I'm gonna look over at the questions and stuff too and see if you guys are talking about anything. That was a bad demonstration on Alti being. I'm trying to say, yes, Alti is risky, but it may be in a different way than you think. It's going to, if you put it against the Russell or you put it against the stocks that it owns, which are really volatile stocks, it's going to be down less in a down market. Now, that doesn't mean you necessarily want to own Alti. If you knew the market was going to go down for 100%, it depends on how long it's going to go down. But if you knew it was 2008 or something, that nothing does well is what I'm trying to say. Nothing does well when the market goes down. They may do better, but what you really have to focus on is what you're giving up, is what your long-term sacrifice. But it may be worth it to you. Maybe you're giving up. The kind of person I'm looking for is somebody that's my audience, my target audience is somebody that understands they're leaving money on the table, but they're doing it for a higher purpose. They're running a business, or their wife, she wants to quit her job and they're using it to replace her income, but they aren't, and the person I'm not trying to get is somebody that's trying to use these to make their first million. Because I don't think these are the best way to make your first million, but I think these are a good way to spend your second million or a decent way, not to spend is the wrong word, but to monetize your second million once you're in your 50s or once you retire. Some people retire at 45, at 55, 60, whatever. They're perfect use case for that, in my opinion. All right, I'll go back here. But where is the darn? Gosh darn it! Where is Fubu? Oh, here's Fubu. Levi soars after a strong quarter. What? Or Levy? What's Levy? Is that like that real estate firm? Or that's not Lee? I mean, Levy. Levy is. I don't watch. I'll turn this on since I ran out of stuff to talk about. Oh, Levi. It is Levi. Okay. All right. I'd like to see her in a pair of straight legs, skinny jeans, little hottie. All right, guys, 1 minute. There's where I was last year, right there. Kramer. There we go. I see Jay and Mike. I didn't recognize anybody else. Well, we'll go get the NASDAQ official video, and I'll show that to you guys as well. I just didn't know if I could find it in time. Do you guys belong to the Kramer Investment Club? He has some good ideas sometimes, I thought. I mean, I know they run an inverse fund of his, but when you're on TV every night and you have to talk about something, you have to talk your book all the time, you're going to have some really bad picks. I mean, remember the time he said they know nothing? I mean, Kramer's just classic, but, and he gets a lot of trash, but I don't know. I think he's about as good as any of the rest of them. All right. So what are you guys talking about? Let's catch up on that. And, we'll see how the market closes. We're going to look at the max factor, and I'll let you guys go. So we've already talked about YieldMax, and I'm going to have to defer till later. Yeah, I think they made a mistake also. Div Dad 83. So I'm thinking 83. You were probably born in 83, which makes you what, 41 or 42, something like that. Anyway, that's all my friends. My friends in Austin are that age. They're all born in the 80s. I'm an honorary millennial. I hang out with younger people anyway, but it could be it's either one or the other. Lots of times you put the year you graduated in your name. And if that's the case, then you're about my age. You're probably 60, as I'm 58. Anyway, okay, so what's Div Dad saying? Better Bitcoin plays out there than what? Then what were we talking about? Oh, then Ybit. What do you think could be done to help the fund Ybit move closer to? Okay, well, that's a good question. I hadn't noticed it wasn't. I hadn't noticed it was off. Let's take a look at it. So Ybit, and then we'll look at how do we find it? What's a Bitcoin ETF that just follows the unlevered Bitcoin? I mean, is it IBIT? I mean, let's just look at IBIT compared to. I mean, I would want to put up Bitcoin futures for the purest expression, or maybe Bitcoin Cash for the purest expression, but they only show you ETFs in this tester. I mean, it looks to me like it's following IBIT pretty well, but I still understand it may not be following the Bitcoin Cash or futures as well. And there's multiple reasons for that. Something called contango, and when you have futures decay or futures have erosion. So it could have elements of that. Maybe that's part of the reason. I don't know. But I mean, Ybit, I mean, look at this. Let's just look at it. It paid $2.43. And this is in a third of a year. So we're going to call that $7.50 on $10. I mean, 75%. I mean, I'd be down with that. Look at Ybit. You can own Ybit and you can get nothing. You can get nothing to like it, but look what else you get. Ibit went from 48 to 54. We were talking about earlier. I was kind of joking that. I'm sorry, Jax. I kicked Jax by mistake. My bad, Jackson. I was joking yesterday that there's a fund out there that tries to avoid dividends. And I was thinking, well, how rich would you have to be to avoid dividends? Well, the answer is not actually. No one wants to pay extra taxes. So, I mean, but when the larger amount of money you have, the more it comes into play. But see, here's the thing that people miss. All these influencers are talking about how bad these funds are. Look at how much less YBIT went down than IBIT. I mean, IBIT was down 10% there, and YBIT just looks like about 4 or 5%. I mean, it's half the downside over this short little time frame, and you're getting a gigantic dividend. I mean, what's not to like, unless you don't need the dividend. So that's why I say, if taxes are a concern and you're still working, you get IBIT. Taxes maybe aren't a concern, or they are a concern, but you're willing to, you understand how it works or whatever, you might want to look at YBIT or buy YBIT in a Roth. Like I was saying the other day, even if you're 40, it's not too late to max out a Roth every year. And you can end up with, if you work till 60, or you could end up with $7,500 a year. Over, that's what it's 150,000. And you could fill them with high yield funds, because you get all the income, all the yield you want. And that could be the yielding part of your retirement. But don't touch your other stuff. Don't touch VU and VTI, right? Anyway, that's my advice. All right. So let's look here let's look here. Let's look at this is just YieldMax. Since this is YieldMax happy hour, we're going to check out YieldMax first and see how it closed up. I was kind of looking at the market while you guys were talking. I mean, while we were listening, and it kind of looked like a non-event to me. I mean, anyway. So this is what wasn't working this morning, so this is the average total return for all of these funds. That includes Murney. So all I'm saying is this speaks well of YieldMax, because you put in all the funds together and throw them in, they're doing pretty well. I mean, to pay a 59% yield and be up 28%. I mean, come on. I mean, that's pretty good. Now, granted, if you would have just had the stocks of these funds, you'd be up more, but you wouldn't have had that. But so it comes back to, do you need the 28%? With me anyway, that's what it comes back to. Let's look at the top 20 list for this week real quick. Let's see if it's changed. And see, I have this loading problem going on again. What I'm wondering is, I think I've noticed it more after hours. I think that it has something to do when the market closes. It has a harder time scraping data from FinViz or something. But that it sure is frustrating, because it sure is handy when it works. Anyway, we'll just do the best we can. I mean, FEPI, IMWM, SDTY, YETH, and FIRI were going to be in the top 10 anyway. So top 20 anyway. So number one, we have SOXY, and that is from YieldMax. Number two, we have Big E from YieldMax, 13 and 11 days above their respective moving averages. Tons of momentum, 13 days worth of momentum, 11 days worth of momentum. MSFY, 9 days, 9 days above its moving averages. It's not quite that simple, but anyway, SPUT looking good. I know Marcus likes that. Will, look at old Will. Will is looking good. Then we have Maxi, KQQ, GPIX, Triple QI, who's the fund that influencer was talking about. And yeah, Triple QI is a great fund, but they have all the same stuff all the other funds have. Maybe a little bit less of it because they have a little bit less dividend. NVDW, IDEVO. I always say IDEVO on that one. IDVO. What Amplify? What even is that one? Is Devo? I used to know. MSFO, YBTC. So we have two Microsoft surrogates on here, which is good. But then look how many index surrogates we have. We have Will as an index, KLL. Now, Will, GPIX, Triple QI are index based. There's all YBTC. So which one were we talking about that you said wasn't your favorite? I was just talking YBit. Okay, so let's see where YBit compares to the other ones. Let's just go back and there's so many of them. I can remember what we're talking about. So there's YBTC. So is that the highest Bitcoin? Well, Maxi's the highest Bitcoin one, but that's levered. That's kind of a different deal. Not really an income fund. It kicks off a little income. YETH. Oh, it started working again. Holy cow. All right, let me scan this one more time. Okay. Anyway, same thing. Soxy, Biggie, MSFY. But the top Bitcoin surrogate would be Maxi, but that's double levered, and they only pay yearly. It's not really a yield fund, but they did yield 24% last year, so they do pay. But anyway, KQQQ, GPIX. Okay, so the first true Bitcoin one is YBTC from Round Hill. That doesn't really surprise me because Round Hill typically has some of the best funds. But let's see what it's doing better. Let's see what makes it better. Let's go find the second best one, YBTC and YBTC and YBit. And that's the one we were just talking about. That's from, I put Round Hill on there by mistake. But YBTC versus Round, okay. For one thing, they're not that far apart. YBit is a day and a half above average. The other one was like 3 days above average. So I guess it's doing about twice as good. All right, so let's just go to this. YBit versus YBTC. All right, I can see why YBit. I'm fine with the max factor having YBTC a little bit ahead of YBit. It just has a little bit better performance. Now, but what I'm just going to say without even looking at it, but maybe it pays a little bit less dividend. I don't know, but let's just go look. So this one paid $2.43. We already talked about that. So it's 75%. So this one paid $6. Make that 18. Make it 19 for the cents. So 19 on 40 is good. Also, it's like 40%. So there you have. That's how that works. That's how that works. And so with the person asking, if you're trying to decide between these two funds, this is one thing you might do. You could, if you need income, they both pay a pretty good income. So, but I'm saying, if you're more income focused, yeah, maybe YBit because it pays more income. But if you want to more upside and less you want to catch less grief from your friends, I mean, this one should do a little bit better on the upside. Now, on the downside, in a bad market, guess what? Your friend that has YBit's going to be outperforming you. We just haven't seen a down market lately. I mean, that was April's pullback right there. Let's go from the first of the year. Let's go Jan 1 to now. All right. And I was exactly wrong, at least on this test. YBT. Oh, no, I was right. Exactly. YBTC that had the lower yield. Lower yield means more upside participation, but less downside buffer. And sure enough, YBTC led by a little bit on the downside. That's exactly what I would expect. But you can see even on this thing, it led a little bit on the downside, but it's already back. It's already past, it's already over. It's already up again. But this was a good question. These are good examples of, because if one pays 80 and one pays 40 or 50, it's twice the dividend. Well, that extra amount, because there's no free money, right? Money doesn't fall out of the sky, at least not down here in Austin. Anyway. But yeah, good question. Good question. Okay, let me try to catch up with all this. So DibDad's saying better plays out there, in my opinion. Okay, yeah, I'll remember that. Okay. Happy Distribution Friday. Yes, happy Distribution Friday. Now, Norman, you have ULTY, I believe. We were on that show earlier, or maybe it's on this one now. How risky would you say ULTY is? Or, I mean, I'd say out of all the YieldMax ones, it's one of the more risky ones, but anyway. The IV on SPY is dismal. Yes, absolutely. These high yield funds monetize implied volatility. So in times like the summertime when implied volatility is low and the market's not moving around all that much, expect lower dividend checks. Now, especially on the indexes. Now, sometimes if you're in a single stock that has its own volatility unrelated to the index, you'll still get big checks during the summertime. Not to mention the single stocks also, the ones that really go up a bunch, like MicroStrategies, they'll pay you some of that upside. They have to, but you'll get. But in so, all right, Summer Man, you're listening and working. Oh, thank you for listening while you're working. So Summer Man is a farmer, but he's a businessman. But I would think that I think his business would basically be called farm to table stuff, or but anyway, he has a really good looking business. If you want to put your website up there and I'll show it to people, but I don't know, he may not want that. Okay, so LevMax ETF may include versions of the lightning spread for the is that a question? No, I don't think so, but I really don't. I'll get into the middle of it. But no, I don't think so. The lightning spread, I mean, I've been running some tests on the lightning spread, and it's not testing out that well in the back tester. So, but I don't know the exact strikes, and maybe there's something I don't understand. They really haven't brought it out. And/or they're using it right now on single stocks. It may be more of a single stock product. On the indexes, it really doesn't test out as well as other stuff. So, okay, you want to look at FIRI? Okay, I'll look at that. Alt is not risky. Okay, let's see here. The IV on SPY is half what it was 2 weeks ago. Yeah, that's crazy. So literally, you can expect like lower dividends. I mean, probably half on some of those. I mean, or half what you were getting like in April for sure, because that was insane probably on the indexes. All right, so let's look at FIRI for Marcus real quick, and let's see what's going on with FIRI. Oh, he's probably talking about in the max factor or the high yield technical analysis. Let's see where it sits in here. FIRI. Need to build a search function into here. Why is FIRI so low? Well, one thing, it's an income fund. It's not a growth fund. You notice the growth focused stuff is shot to the top, all the indexes and stuff. There's old triple QI, just can't get out of its own way. Gosh darn it, that thing. Cannot get out of its own way. There's Omaha from Vista Shares, Murney, iGold. There's all YieldMax. I mean, hell, triple QI is beating YieldMax. Where is FIRI? Come on, what is it? Oh, there's that YETH, man. That one's the lowest of the 3 rated Bitcoin ones. My metric emphasizes short-term performance. So just because it's the lowest of the 3, it means that it's had the worst short-term performance most likely lately. But it doesn't mean necessarily that it could still be good funds that are down here. I mean, people used to love PayPay, PP, whatever you want to call it. I don't know where the heck Riser is. I mean, not Riser. Oh, there it is, FIRI. So let's just go see what's holding it back. So right here's the today's price, 1905. Okay. Well, here's the trailing 12-month dividend, $1.70. So that's about an 8% payer. Okay. So it's A factor is a negative number. I know it's hard to see, but the A factor is really short-term momentum. I was darn it. Now I zoomed in too much. All right. The B factor is also negative, although not by very much, just 4 1/1000ths of a point. Let's see. Doesn't move very much. It only moves 10 cents on average every day, which is about 0.5%. So it's really steady. It only moves 0.5% up and down. Has low risk. 1 is the same risk as SPY. So this has 40% of the risk of SPY. So it looks like it'd be good at protecting your NAV. Now what's going on with here? Okay, so now, but it just it's just not doing as well as some of the other ones, just mathematically. Let's look at it on FinViz maybe. I thought I had FinViz open. Come on. Gosh darn it. Why do I have such a bad short-term memory? Oh, yeah, FIRA. Gosh darn it. We were just talking about that. I know why I have such a bad short-term memory. I wasn't asking for opinions. It was a rhetorical question, or not rhetorical, whatever. You guys know what I mean. Okay, fire funds income target ETF. Well, I'll say this though. I mean, just at first glance, my immediate thought is, how's it only paying a 9% dividend and still sloping down? But it's not growth, but heck, it doesn't even have see what it owns. I mean, so it has this carbon collective stuff, some kind of carbon short duration, green New Deal stuff. I don't know. Not my cup of tea. But it might be, those things can be fine for paying yields. They probably have that, but it's super steady. So they have that. Then they have this Madison Trust short-term strategic income ETF. Well, I mean, that's up since April, like 20 cents. So, you know, they just have a bunch of bonds and bond type stuff. They probably have some covered calls in here. I think they have ULTY to bring their average yield up. This is called the barbell approach. So anyway, I didn't click on riser. I don't. Gosh darn it. I'm sorry about that. I like riser though. But they have riser in there, and you can see that's super steady. That didn't even go down in April. I mean, it doesn't look like, maybe a little bit. Riser, this one is levered interest rates. So if interest rates go up, this is the one you want. It doesn't pay a yield, so it's not in the max factor. It pays a small yield, I think. No, it is. Actually, it is in the max factor because it pays just enough. It pays 5.5. So, of course, it's in the max factor. That's where we're just looking at it, dumbass. Gosh damn it. For a while, I did take it out. But then when I saw that it paid 5.5, I thought it's close enough to put it in. Riser, okay. Yeah, 9 off this one. But I think it's supposed to pay 12. 9's only for, look at that. And it may pay more than 12. If it's paid 9 over this time frame, it looks like it might pay a little bit more than 12. But here's what's holding it back. The performance for the quarter is down 2%. Not total return, I mean, necessarily, but just the NAV. So, yeah, that fund's just, I mean, it's not definitely for everybody. Is that what you wanted to see, Marcus? You have some good funds. You have to balance them out with some bad funds. Yeah, I know all about misspent youth, except I was 40 and 30 and 25. But yeah, I know all about it. My youth lasted a long time. Anyway, I hope the IV will come back, but sometimes in the summertime it doesn't. And that's why they always talk about sell in May and go away. And I think in the old days, before they had, this is like a real old thing, but before everyone had one of these and could trade from anywhere in the world, even as late as like 20 years ago, you aren't going to be in Monte Carlo flipping options or whatever. The technology wasn't there. Maybe if you had a Bloomberg machine and if you own your own company, maybe. But it's just been recently that anyone could do anything from anywhere. But prior to that, all the big shots would go on vacation. So the theory was no major decisions got done that day. Same thing with Yom Kippur. On Yom Kippur, lots of times everyone takes the day off. A lot of the people on Wall Street are not involved. So the saying is that you get less volatility on those days, which doesn't mean it can lower volatility. Sometimes it can exaggerate market moves. Sometimes you can get bigger market moves because of the less market participants. But anyway, I don't know if the sell in May and go away is a thing anymore, but it's acting like it though. It's really acting like it. I don't know. Are they weekly now? Yes, I do think they are weekly now. I think I saw that, and I think I saw another influencer talk about it. But let's just pull up TSYY right here. Just check it out real quick. It pretty much, if you aren't weekly, you can't compete. I mean, it just drives me crazy. You know what my feelings about it, but yeah, it used to be if you weren't monthly, you couldn't compete. You know, there was a big phase about 2 years ago for everything to go monthly. YieldMax kind of started that, but there's other ones too. Yeah, here we have it. Now, see, I bet you I can just tell by the looks of this, this probably pays a sky high dividend. And I don't have it memorized. Yeah, there you go, 97%. I was just talking to somebody on Twitter, but I deleted my comment. But they were asking, the question on Twitter was, what do you think would make ULTY's NAV go up? And I just responded, I said, it's not going up. Forget about it going up. It's not going up. It's not, you know. But then I erased it before I said anything. But doesn't mean that it's impossible, but I'm just not going to count on it. But so, you know, there's a rule of thumb on that. NAV return or total return equals NAV return plus dividend return. All right. So if you have a dividend return of 100%, to get a NAV return of 0, you need whatever stock is that underlying to be up 100%, at least, and more like twice that. But forget about that. But you at least, because there's no free money, the money's coming from somewhere. They're giving it to you from your NAV. So that's my rule of thumb. So if you buy a stock that yields 30, like Aptly, let's look at APLY. What does that yield? 25 or 30? Then the NAV can go up some years, but what it takes is a year where Apple, which is the underlying, is up more than that 25 or 30. And like I say, more than even just one time, but at least you just at least have to replace it, because that's also assuming that the managers are able to catch that upside, but they do a pretty good job. Total return equals NAV return plus dividend return. So yeah, so something that pays 20 or 30, sure, it might go up because its underlying might be up 20 or 30. But for Alti to go up, it would have to, and it has a basket of 15 or 20 stocks. Those 15 or 20 stocks would have to be up more than the dividend over the course of a year. Now you notice ULTY is going flat sideways right now. So what does that mean? That means their portfolio is making about 80 or 90% right now, because they have those high beta stocks. The market's up, what, 15% in the last month or something? So lots of those stocks in Alti might be up 50 or 100% in the last month, or you know. So that's what's causing Alti to go sideways. Apple's going sideways. So whatever amount they're paying out is about equaling Apple's upside. Now let's see what they pay out. They pay out 34%. So that 34% is just missing. If they, you know, that's. But there's no free money, and so that's the answer. So Apple needs to go up more. Let's go back to Alti real quick. But then, of course, if the market goes down, it doesn't matter which one it is. It's going to go down. But the catch is it's going to go down less than the underlying. So, you know, still doesn't mean they're for everybody or all situations. All right, come on, ULTY. Anyway, I'll take questions or whatever. This is going slow. I need to do my Friday house clean. I was supposed to clean the house yesterday. I was supposed to get my hair cut yesterday. You can see I didn't do either of those things. I need to go take care of that business. I'm going to watch that Formula One. I'm going to watch that show Formula One tonight. Later, Grateful Trader. Yeah, Defiance did change to a target. Triple QI, WDT, and IWMY to a target 30. And I don't know if that's taken effect yet. They filed for that change, but that fund's just been a bust. I mean, the first thing, that fund was all right when it first came out. I liked it, but a lot of other people did. But then Jay bowed to the woke anti-high yield crowd, and he started jacking with it, and then went to weeklies, and then he says it wasn't going to affect anything, but he brought the daily goal down and stuff like that. That fund's a mess. Jay, I mean, Jay's a nice guy, and I like him. He's a big guy. I wouldn't say this in front of him, but he bowed to the anti-high yield crowd. So anyway, all right, guys. Well, I'm going to get out of here. I appreciate each and every one of you guys, and I will talk to you later. I'll find the clip of the bell ringing ceremony and put that in the Discord. I'm sure we'll all see it a jillion times. Sorry that wasn't very good, but I was also hoping maybe one of them would come on with a live stream or something. Anyway, guys, I appreciate y'all, and you have a wonderful afternoon. See ya.